Okay, the next item, Mr. Hicks, we have is our comprehensive annual financial report. And so we have representatives from Heinfeld and Meach. The board has a copy of the presentation. The presentation also has been published. And we have, Mr. Casey Good, and we have Corey, and I don't want to mess up the last name, Arvitsu. And I also know we have our county treasurer present as well to address some of the questions that may arise. So I'll, with your pleasure, at the pleasure of the board, I'll turn it over to both gentlemen.
Thank you, members of the governing board. I appreciate the opportunity to present to you the results of your 2016 audit. We do meet with you each year, as you are aware, and we also meet with the audit committee, which we met with last month to go over the audit. We'll spend a little bit of time going over the report itself. I do understand you have been provided an electronic copy of the financial report, so hopefully you've had an opportunity to take a look at that. I'll just go over a few bullet points I'd like to comment on the CAFR. Then KC will take over. He's the audit manager for this engagement, works very closely with management in working up our audit planning and designing our audit procedures, and just provide once again a little bit more perspective on some of the audit procedures we perform as well as the financial statements themselves. Then certainly at the end of our presentation we will field any questions you may have for us. The comprehensive annual financial report starts off with the transmittal letter, and that's just an introductory letter, and that was prepared by management. Dr. Sanchez and Carlo did prepare that. I do encourage our school district clients to take advantage of that and identify initiatives, accomplishments. There's certain requirements in there to talk about the economy and the district profile, but this district does a very good job of writing a very well thought out letter, a lot of information about accomplishments and initiatives. I think it's 12 or 13 pages long, much longer than many transmittal letters for school districts that we audit. Our auditor's report is early on in that report as well, soon after the transmittal letter, and that is just our assurances that the financial statements are materially correct and that you and decision makers can rely on those financial statements. After that is the management's discussion and analysis. This is a required part of financial statements, of any financial statements for a school district. Has a year-to-year comparison, so you can kind of see the changes in certain activity of the district from year to year. Has some bullet points, once again, prepared by management to discuss those changes. Required to address the budgetary comparison for the general fund, as well as provide information on the capital assets and long-term debt. Once again, a required part of any financial statement audit for a government. After that are the financial statements themselves. Government financial statements are a little unusual in that there's multiple sets of financial statements. It starts off with what's called the government-wide financial statements, which has all the assets, all the debt, all the capital assets, all the receivables on a single statement. That's a little bit different than the fund statements which follow, which really focus on the individual funds of the school district. As you're familiar with, probably terms you hear more about, the general fund, your Title I grants fund, classroom site, unrestricted capital. Those are all major funds. Those are required to be reported separately up front and for us to provide certain audit procedures to those. That's just, once again, how government fund financial statements are set up. And the rest of the funds, all of your other special revenue funds, unrestricted capital, or your other capital funds are combined in a single column in the front of that report. The notes to the financial statements follow. Really not a lot of changes from last year. Last year was the big change with your notes with all the revised pension standards and all the disclosures related there. There was a minor change with notes related to investments, and Casey will show you the change there. Budgetary comparisons follow. Once again, for the general fund, your Title I grants, and your classroom site funds, those are required to have budgetary comparisons in the back of the report after the notes. But here's where the value of the district preparing a comprehensive annual financial report lies, is in all the statements that follow, probably 50, 60 pages of budgetary comparisons, individual fund information, just not those major funds I discussed earlier, but all your individual grant funds, community schools, auxiliary operations, all that information is provided in detail in the back, which is not required for an audit of a governmental entity. The district has elected to do that, provide that additional information for a number of years, as you're aware. Then the report wraps up with the statistical section, once again, not a required part of a financial statements. The district's election to do this comprehensive annual financial report has a lot more information. Financial trend information for the past 10 years, revenue capacity information that focuses on property taxes, information on debt capacity, demographics, just other operating information. This part of the report is useful because it does help the district meet its continuing bond disclosure requirements. There's a lot of disclosure requirements because the district has obviously a significant amount of bonded debt out there, and there are disclosure requirements for the bondholders that the district must satisfy each year. This part of the report very much helps the district satisfy those requirements. And also it's just other insightful information for constituents, yourself as users, grantors. They like to see that 10-year, multi-year information at bond rating agencies. It's a very useful part of the report. So with that, I'll turn over to Casey, who will provide just a few more slides on just highlight some of the changes, some of the items as far as change this year for the notes, and provide a little bit of additional insight. And once again, we'll certainly answer any questions you may have. Casey?
Thank you. So I'd like to start off with a high-level financial analysis of the operations for the year. Detail on this information can be found on page 27 of the CAFR. Within the management discussion analysis, it has detailed tables within it. I chose to provide a high-level overview. Revenues remained relatively stable, increasing $6 million, or just over about 1%. Most of that was driven by a small increase in the base level support and a small increase in the district's ADM as compared to 2015. Expenses, were consistent at $418 million, with increases in instruction and a decrease in admin costs. The combined fund balance, moving on to the fund financial statements, the combined fund balance was $80 million. Of that $80 million, $49 million of it is already claimed. It's restricted for specific purposes by either enabling legislation or outside parties. The other $31 million is not specifically restricted by an outside entity. Overall, the debt was paid down by about a total of $25 million. That's inclusive of your total bonds that are outstanding, capital lease obligations. There was no new issuances of debt during the year, so you did show a net decrease. And there was an increase of $13 million in pension liabilities. And we discussed that very much in detail last time we were here, but it has to do with results of operations from the Arizona State Retirement System. As Corey had mentioned, one change in the financial statements that you might notice this year was the implementation of Governmental Accounting Standards Board Statement number 72, which requires governments to account for investments at fair value based on a hierarchy of inputs. This is not new per se. Government has been reporting investments on the fair value. This is just something that has come over from the private sector. Not-for-profit entities have been reporting this hierarchy of investment or fair value inputs for several years. It's just new to governments in this year. In footnote 5 on page 62, this is just a small example of that new footnote disclosure where we talk about the types of investments that the district holds. And the category levels, there are 3. Level 1 investments are just active markets where you can go out and buy and sell an investment. Level 2, is where there's significant observable prices. It's not something that's readily available like U.S. agencies, for example, or negotiable CDs. And then level 3 is something like a real estate investment, which the district does not hold. So those detail out your investments for the year. The total amount of that was $52 million. $18 million of it is detailed out right there with fair value inputs. The rest of it is either held with the state treasurer or the county treasurer. Moving on to receivables for the year, we wanted to highlight this note as well. It's on page 73. Due to the nature and operations of the government, or of the governmental operations of Tucson Unified, there are significant receivables that are outstanding at year end. As you can see, we disaggregate by major fund and detailed out the source of where these receivables are coming from. For example, just in the general fund alone, the state government, Arizona state government, owed Tucson Unified $56 million. That relates to the state of Arizona's equalization rollover. The majority of these outstanding balances, which aggregated up to about $86 million, were paid to the district within about 5 days. And it's just due to the reimbursement basis that the district operates on. For example, most of the grants that the district gets, you have to spend the money before the state will reimburse you for those funds. Similarly, for your adopted funds, like the general fund or the unrestricted capital outlay fund, you can spend up to a budget limit even if you don't yet have the cash to match that. So we wanted to detail out the receivables that the district had at year end. So just a brief summary of the results. Our audit procedures are pretty much performed year-round. We're here from April through December. We presented to the audit committee for their approval of the CAFR on December 16th. They had a few recommendations for modifications to the CAFR. We made them, turned around and issued the audit or the CAFR on December 19th. We had an unmodified or a clean financial statement opinion. We didn't have any disagreements with management over presentation, disclosure of the financial information within the CAFR. We didn't identify any significant deficiencies or material weaknesses that were reportable in internal controls over financial reporting. And finally, we didn't have another management letter that was issued. So overall, a clean audit opinion. We also issued two other reports, the USFR compliance questionnaire, which every school district in the state is subject to. It's a detailed questionnaire that has to do with the day-to-day operations of the district, from procurement activities to student activities, depositing cash timely. Based on our risk assessments, we went through and did site work at 8 schools as well as the district in the aggregate. So we ended up touching many of the schools throughout our audit procedures. Out of 500 possible questions that we have to answer either yes or no to, we noted 13 comments. And I'd like to say these are still in draft form. It has not been finalized just yet. We hope to have them issued by the end of this week. And then the single audit reporting package is an audit of your federal programs that the district receives, like Title I, special education, child nutrition, based on the requirements that are the district is subject to. TUSD qualifies as what's called a low-risk auditee, meaning that you didn't have any material weaknesses in the prior 2 years. You had audits in the prior 2 years. Based on the Single Audit Act, we're only required to audit only 20% of the district's federal awards. We actually audited about 40% of the federal awards, and that's rotated out every single year. So for 2016, we audited improving teacher quality, the child nutrition program, and 21st century schools. We had one compliance finding that was a repeat from the prior year, dealing with highly qualified teachers of core academic subjects. That is a very common compliance issue with most of the Arizona school districts, just based on the funding levels, but that requirement is that 100% of all teachers of core academic subjects be highly qualified. So I'm going to go ahead and turn this over to Corey, and he'll wrap it up for us.
President Hicks, members of the board, hopefully that presentation provided you some insight as to the report itself and our audit procedures. I would just like to take the opportunity to remind you we are your independent auditors. That means we don't make decisions on how and when resources are used. That is your difficult task to determine that. Our responsibility is to provide our audit opinion on the completeness and accuracy of your financial statements. We do perform a number of compliance procedures. Many of those are mandated by the State of Arizona's Auditor General's Office, or that USFR compliance questionnaire that Casey mentioned. And it addresses a number of areas for compliance, including the classroom site fund. So with that, Mr. President, if President Hicks, if there's any questions I can field or we can field from the board, we'd certainly do so at this time.
Okay, Ms. Foster.
I have a couple questions. First, thank you that this report was 198 pages. And so I want to thank you for that. It was not, I mean, I know this presentation you gave here was 4 or 5, but there was a thorough 198 page that's available to the public, right? It's online under this agenda. And so 3 questions. The first is on page 184, we talk about the ADM, and it increased from, that's our enrollment, from 45,802 last year to this year. We have 45,870 students, so 68 more students. And I know there's been some, how is this number with all of the changes in synergy and the changes at ADE as well, how did we get to that 68 students increase?
Well, first, I'll comment that we do perform, once again, a number of audit procedures on
Sure.
attendance through the State Auditor General's office, and we probably had, I would imagine, a finding or two. That's not uncommon for a district this size to have a finding or two on attendance, and that will be in the USFR. With respect to this specific number, Board Member Foster, we get this number from management. We actually do not audit this specific number in the back of the report. This is part of our unaudited report. I would certainly be happy to turn that over to management if they'd like to
maybe
provide
that's
some
a question-
insight to the
Right.
specific number.
Okay, and I'll hold on to that because that's not your realm. I thank you for telling me that that was the number that we've then reported to ADE as well. My second question is, and maybe this is for Dr. Sanchez, on page 75, it talks about the 2 schools that were sold and the bonds, the money that we saved with.
Yes, ma'am. I can address it, Mr. Hicks.
And I should just say quickly that so many people ask me, so what did you do with all the money that you got when you sold the 2 schools? So could you help me answer that question?
I'll ask Ms. Soto to get up and talk about where those funds are and what's planned. And then on refinancing bonds, Ms. Soto can also address the refinancing of bonds as well.
Great, and I do have one more question.
The proceeds from the sale of the closed schools are on deposit in the school plant fund, right? That is correct. I'm sorry, what was the other question?
With the,
What was your question?
the school, the money, and I apologize. I remember-
Refinancing the bonds.
The bonds and the
refinancing the bonds and the savings from refinancing the bonds.
Right, that happened in this fiscal year, and that will be noted in next year's audit report. As we closed in August. But we saved about $10.5 million, if I remember correctly.
Right, and so
through the
how does
commission.
that affect our district with saving that money?
It saves the taxpayers that money down the line.
Okay, so we won't take as many taxes then from our taxpayers?
Right, the
Because of that.
taxpayers will have to pay less towards that
Perfect.
debt, yes.
Great, thank you.
Dr. Stegman.
I have several questions for the external auditors.
Yes.
So on page 2, you had the highlights, and I was going through the CAFR and you know, reconciling those with the CAFR. So are these statements based on full accrual or modified accrual? It looked like there was kind of a mixed bag there. It wasn't consistent.
Sure, yeah. So the government-wide financial statement presentation is based on a full accrual, similar to for-profit entities. The first 2 line items that we're citing right there, revenues and expenses, are based on the full accrual. When we move over to our discussion of the fund financial statements in bullet 3, we're now moving into the modified accrual realm, where we're talking just the current financial resources of the district discussed on a fund-by-fund basis.
Right.
If
So
that
what's
makes
the rationale for that not following a consistent approach?
So I guess we just wanted to present the overall revenues and expenses of the entire government within the first 2 bullets, and then detailed down something that's more relatable is the fund financials, which you deal with on a day-to-day basis with budget adoptions, how the district's accounting for specific monies. So that probably wasn't as clear as it could have been, and I apologize for that. But from 3 down, we're talking on a fund level.
So when I've seen some similar presentations, sometimes the presentation goes back more than 1 year. It provides a little more sense of trends. Is it typical when you're presenting to school districts that you only make a 1-year comparison? Is that your standard approach?
Member Stegman, we'd be happy to, in future years, provide multi-year information. The management's discussion and analysis in the report does provide year-to-year comparison. We'd be happy in future presentations. We're always looking for feedback and input on how we can improve our presentations to the governing body, and we'd be happy to either at a future meeting or a future special session provide as much insight as you would like on a year-to-year comparison or multi-year comparison. For that
I
matter.
mean, you do this with a lot of districts. I'm saying, is this a typical in that respect?
This presentation is very typical.
Oh, okay.
And in fact, we probably only present to, I suspect less than 20% of the school
Oh,
districts.
okay.
about it. So actually, presentation to the governing body in a public forum is not common.
Oh, okay. Okay, good. Well, thank you for doing that. So I have a question.
Again, one question each, and then you can ask again. The policy. Ms. Sedgwick?
Okay. Sorry, I thought that he would continue asking questions. I will go ahead and piggyback on his question. So it seems that if we did have some more data over different years, so some of this is hard for me to contextualize. Please forgive my ignorance, but I imagine that many of the audience members, our community feels more like I do when it comes to these numbers, and so I'm just really trying to understand.
Absolutely.
So you say for the full accrual, that first point, that it's up $6 million?
Correct.
Okay, and then, so how, do you, off the top of your head, do you know how that compares to previous years? Is that $6 million for 2016?
Yeah, so it's an increase of $6 million over the prior year. So if in the CAFR report on page 27, we show the fiscal year ended June 30, 15 and June 30, 16 side by side. So that's just a straight calculation. Specifically in fiscal year 15, you had $441 million of revenue. In fiscal year 16, which we report on, you had $447 million of revenue. So that's where the $6 million or 1% increase came from. And you can see on a line item by line item if it was derived from an increase in state revenues, in federal revenues, or charges for services, et cetera, et cetera.
It seemed that when I was looking at the numbers before, it seemed like we've actually flatlined over the past 3 years or so. Maybe it was 4 years. And so I'm just trying to get an accurate picture, an accurate understanding of what our budget is really doing and how it's changed in the past.
Sure, and
since
that,
the past.
like Corey said, in the statistical section, we present the same detailed information that's on those statements up front for 10 years on a line item by line item basis. And that starts on page 159. So if you wanted to look and do analysis over years and trend analysis, that information is all available in the back of the report.
Okay. I guess I'll go ahead and finish. It would be really, really amazing if you could present us with some of that information in the PowerPoint, maybe just going back a few years, and for our audience as well, just, on camera, so that we all understand really well the financial situation in the district. There are a lot of questions about it, and the fact that we use taxpayers' money. We just want to be as transparent as possible. I really appreciate it. Thank you.
Ms. Gruhava?
Thank you. There have been a few questions about interfund borrowing, and we had quite a lot of conversation about that. And I noticed that our county treasurer, Ms. Ford, thank you so much for being here. I'm wondering if you can address either whoever interfund borrowing and talk about the district's role in that versus perhaps your office, because I think that there's some confusion regarding this issue.
Maybe we'll provide an initial comment, and then I think Beth would be happy to take over logistically how it works at the treasurer's office. One of the reasons we put in that note that discussed the receivables was to demonstrate not everybody's paying the district when they should be, or when ideally you would like them to be paying you. You're spending money, you're waiting from the state of Arizona and the federal government to pay you. Doesn't mean you can't stop paying your bills. There are bills you have in various funds and expenditures that have to get paid. And that's just where that short-term borrowing, which Bethel can provide you some insight, it doesn't mean that a particular fund is using funds incorrectly. It just means you're continuing to pay your bills by temporarily borrowing from another fund. That's the beauty of fund financial statements. It shows the classroom site fund, the general fund, your debt service fund. This was the allowable permissible activity in those funds. Be cautious in getting too caught up in the balance sheet, which is just a temporary point in time that is not a evergreen living on. That can change quickly, and in this case of the district, probably changed soon after year end. That balance sheet would look entirely different on July 15th than it did on June 30th. So Beth, I'll turn it over to you if you want to provide insight from your perspective.
And if you can address specifically the 301 money, because that was something that came up, and several speakers came up to speak about it, and
Well, actually, I can't address the 301 money
Okay.
specifically. We end up pooling most of your accounts on my books, according to the standards that are established by the Office of the Auditor General.
Okay.
So your general fund money, that's site money, and the unrestricted capital, and some other funds are all pulled into what I call your operating account. On June 30th, there was money in that account. So it's prudent for you to be able to use your own money to be able to clear your checks and pay your bills, because if there's no money in that account, then I have to turn around and borrow money or loan money to you at an expense to the taxpayers in Pima County. Now, they had alluded to the fact that your balance sheet would change completely if you measured it on a different date other than June 30th. The deficits that you're seeing in this interfund borrowing is really being caused by the delay in the payments from the state for your equalization. If you measured it, all those loans are paid the minute that I get that money in, which usually happens the first several days of July.
okay.
Okay?
Mr. Hicks, can I follow up a quick question since she's at the mic?
Sure.
Okay, it's just, how many months are we in arrears right now, TUSD, would you say? How much money is owed to the district right now, just as an
Right now, at
example?
this point in time,
Or how many months are we behind?
what is it, 4 months from the state.
And how much a month? Any idea? Just to give people an idea of why interfund borrowing happens.
If the state was paying you what they owe you for that current fiscal year within the fiscal year, you wouldn't have most of this interfund borrowing.
Okay.
Sorry, I'm also the CFO at the Pima County School Superintendent's Office. To TUSD, about $40 million approximately. School districts altogether, they get owed about $90 to $100 million on July that we transfer over to the treasurer when we get it.
Okay, great.
And TUSD is not alone in this situation. Every school district in Pima County is.
Thank you.
If I may add, the total, and I checked today, the rollover for TUSD is 46.3 million. Statewide, $930 million.
That is owed.
In the state of Arizona,
Wow.
yes.
Okay, thank you.
Okay, I believe Ms. Sedgwick had another, and then Ms. Okay, go ahead, Dr. Stegman.
I have one question for the treasurer, then I will continue later with the auditors. So who initiates the interfund transfers? Is that you, or do you do that as needed, or does the district initiate those entries?
They're occurring de facto because all this money is pooled, and you may end up having checks written from the general fund that's clearing out of this pooled account versus unrestricted capital. They're all coming out of that one account. So if there's not enough unrestricted funds to clear that check within that pool, but you still have $100 million in the account, that check may be being cleared with other money.
But who makes that determination? Because there are various ways that could happen, right? Because there are multiple funds. So who's making that decision?
It's not because they're all pooled. Your money it's fungible. It's because it's sitting in one pool. I can't specifically identify on my books what dollar relates to your site fund, what one relates to general fund.
Excuse me. So those journal entries are coming from the district. I mean,
There are no journal entries on my books.
Right. That's my point. Right. Okay.
Okay.
Okay, Ms. Foster.
So I'm concerned about, I heard people say there were not multiple years, but on page 171, 172, it says 10 years. It's the last 10 fiscal years, and so the $6 million that Ms. Sedgwick talked about is right there, as well as all the way back to 2007. And so when you said you could very easily do multiple years, but you have done multiple years, they're all absolutely here for us. They're just not a part of this PowerPoint presentation right now. Is that correct?
Yes, Ms. Foster. I guess, we do our best to create a presentation that satisfies the need of the board this night based on our historical presentations. It's easy to provide too much information and easy in this situation such as this maybe not to provide enough. With some
But you do have 10
Initial
years.
insight perspective, we would be happy to provide
Right.
more information. And yes, the CAFR, once again, one of the great things about the CAFR is the statistical section has 10 years of information.
Right, so any community member who doesn't feel that we have provided enough information can dive much more deeply into this 198-page report, which I did to prepare for this evening, so I was able to pull it. It's page 171, if anybody wants to go compare 10 years back.
Yes.
Thank you for clarifying.
Ms. Sedgwick?
So, and I don't want to kill a dead horse. I think that I have made clear, even despite Ms. Foster's comments, I do appreciate that. However, the CAFR is very large, and it would be nice to have that information presented to us. And so I just, it could be because I'm not comparing the proper numbers to the proper numbers. Because to my mind, if we take the full accrual and then we have the modified accrual, this is apples and oranges, right? And so we're not going to have a very clear understanding of what actually is going on here. But it does say, we are talking about the whole. It mentioned that the admin, so there were increases in instruction and decreases in admin costs. And so, again, I think I am beating a dead horse. It would be very helpful just to have that information in a comparison format over the past, say, 5 years. And then we could just get a really, really accurate picture of what the district is doing and how it's been going over time. And I understand that too much information, too little information, it's always a question. Just because, particularly my presence on the board now, I do believe that the community has communicated to us that we all want more transparency. And so if there is going to come a question of whether or not you're providing enough information, I personally would much rather have too much information, and I think the community is just about ready for it now as well.
Ms. Sedgwick, we end our presentation each year with an offer to the governing body members to meet with you at any point during the year and provide more detailed information, whatever form that is, whether that's public, special session, individual basis. That's how we end our presentation each year, to extending that offer. So communicate to management, to us directly, and we will make that happen.
Thank you.
Mr. Hicks?
Ms. Grijalva?
Yeah. So just to clarify, at the end of this last fiscal year, was the district in the black or in the red?
Well, I would say you're in the black if you look at your financial statements as a total entity.
Yeah.
Once again, certain funds had their issues temporarily, but in the black if you look at the district-wide.
Yeah. I just think that it's important to have that conversation because people get sort of sidetracked by information that is not accurate, that gets disseminated over and over and over again. And it's helpful for you as our external auditor to come to the district to say, this is the reality, this is where you are, and you have no vested interest in misleading the board or the community at all, because I've been a part of presentations that were not this positive. So I just wanted to sort of say that again, because I think that it gets muddied a little bit with some of the the conversations about, well, the district is doing this and they're borrowing this and we're in a deficit. And so I think it's helpful to have the financial highlights be very clear.
Yes, Ms. Grijalva, and I will concede, governmental financial statements are not easy to decipher or understand. You mentioned 2 different bases of accounting, multiple funds, you've got these reconciliations. I will concede that, but hopefully at the end of the day, once you get this 160-page, for those that kind of want to dig in and kind of cipher through it, can answer the questions they need answered.
Ms. Sedgwick? Did you have, okay. Ms. Foster?
Just that on page 40 has your answer there about the classroom site fund increase by 1.5 million. And so just wanted to clarify that was right there. So all of this information is...
Dr. Stegman?
So you mentioned the net position. I wanted to talk about the net position. So last year, there was, as you mentioned, a huge adjustment based on the state's decision about treatment of pension obligations. As I read it, that was almost $400 million. Was that correct last year? So comparing 2 years ago, just before that adjustment, to the current year, if I'm reading this correctly, the unrestricted asset, even if after you take out that pension adjustment, so let's just neutralize that because that's a sort of a regulatory decision. So even after you take that out, over the last 2 years, our unrestricted assets, by what I'm reading here, went down 37 million. Okay, so I've got, I mean, on the statement of net position and comparing this year to 2 years ago, that's what I'm getting out of the CAFR itself. So what explains that? Okay, so I mean, it's a decline of more than 400 million, and then most of that, of course, is the pension fund adjustment. But and I could have made a math error, but I'm seeing after that adjustment is still a 2-year decline of $37 million in unrestricted net position. And so what is generating that? Or, I mean, if you can answer that now.
So are you looking at the negative 400 in 2015 compared to the negative 369 in 2016, just to clarify?
I'm looking at, yeah, the 369. I didn't bring the other years, so this is sort of I brought this one, but yeah, I think that's correct. Right.
Well, I would also caution, once are we talking about fund financial statements? Often when governmental entities talk about being in the black, they're focusing on fund financial statements because those are typically elements management and the district can control. Right. Once you get to government-wide, you get into pension liabilities, get into unfunded depreciation expense. That's another element that can affect your government-wide position. So I guess I just want to clarify, what exactly are we talking? Was
well, that is my question, because I don't, what I see, unless I made a math error, is after adjusting for the pension fund, that big hit that we took from the state, there's still a $37 million, as I'm reading, comparing 2014 to 2016, a $37 million decline. Like I say, if I made a math error, I'm happy to be corrected, a $37 million decline in net position. And so I'm asking you, what is the origin of that? If you're saying that's a depreciation issue, or what, or maybe you're not able to answer that off the cuff.
Well, I think if you look at, again, on page 27, we can see that there was an increase to net pension or net position overall of $30 million, roughly what you were estimating, and that's just due to revenues exceeding the current year expenses by about that much. So if you look at year to comparison of that unrestricted net position, it went from negative 400 to negative 360. It actually improved because your revenues exceeded the expenses by about $30 million that we're showing on the government-wide basis.
I'm going 14 to 16.
14 to 16.
Yeah, 15 was different, so I'm going 14 to 16. And you can answer this question later.
All I can request is yes, if
but that kind of jumped out at me.
We're crossing multiple years now, that it would be helpful to have some time to specifically look at that, because once again, you're talking hundreds of $millions in pension liabilities that are moving from year to year. And there are other related items, not just the pension liability, but there's deferred outflows and inflows related to those pension liabilities that could be affecting this as well. Those are in the multi-millions of dollars. Then once again, looking at unfunded depreciation expense, I'd be very hesitant to give you a specific answer.
Well, you could get back to us.
Be happy to.
Decompose that $37 million 2-year reduction.
Okay, Dr. Sanchez.
Yes, sir. I just have a direct question that I'll ask our external auditors as well as county treasurer. Did the district CFO or anybody in the district direct the use of 301 funds directly to cover debts in accounts that had not yet been funded by the state?
No.
Thank you.
Okay.
I have a couple.
Dr. Stegeman.
All right, so I was curious if you could summarize, what tests do you perform on internal control?
Well, Mr. Stegman, those range from compliance tests for your USFR for state statutes. We perform tests of internal control for your federal programs. We obviously look at cash receipts, disbursements, payroll. I'm probably speaking out of turn here because Casey probably has a much better idea than I do as far as some of the specific internal control tests we perform.
Are those summarized in here, the content of those tests?
No, those would be isolated to our working papers
Right.
unless we identified an internal control deficiency, which our audit standards would require us to report to you, which there were none.
Right. And then I just have a couple more, and then I'll be done. So, did you in the field work? Were there any issues? Did you encounter any difficulties in the field work? Just sort of a standard question, I guess.
No, we did not.
Any differences of interpretation of any
No.
of any kind? Any deficiencies conveyed orally that didn't appear in the findings?
No, anything that we noted will be in both the USFR compliance questionnaire and the single audit reporting package when they're issued.
Okay, well, that concludes my questions. And again, if you could get back to the board about that 2-year movement in the net position, that would be great.
If we may just need to follow up just to make sure we're looking at the same numbers.
Yeah, right. And if I'm wrong,
Through
then
the
if
board secretary, just make sure we're looking at the same numbers you're
Sure.
looking at.
Ms. Grijalva.
Absolutely.
Mr. Hicks, and since Dr. Stegeman has sort of highlighted this $37 million, if when you do talk about the information, if you can come back even for a very brief presentation, even during a superintendent's report or something, I think that would be very helpful, because what I'm noticing is we have a lot of miscommunication, sort of manipulation of what the actual data is. And so if that information comes back to us privately and the community doesn't hear about it, then I just think that that's something that would be better said in public. And I also think that it's good to hear that internal controls had no findings. And so that's something that I think that we really have to applaud our district departments and finance for, because that I know that that's something that has happened in the past and didn't happen this year. So thank you very much to all of the hard work of our departments.
Yes, and if I may just conclude, if there are, Ms. Sedgwick, I believe you may have had some specific questions or still kind of trying to digest this report and 10 years information. If we can filter those to one location questions when we come back, I think it would be in our best interest to try to address all the board members' questions. When we're prepared to specifically address those, we'd be, once again, more than happy to do so.
I guess I'll go ahead and ask the last question, even though you have now thanked us 4 times. I know you're trying to walk away. But I do have, it's a big picture question, and maybe you want to address it at a later date. However, it's my understanding that property taxes that the district has collected has been going down. And so if that's been the case, I wonder how our revenue, how we're up $6 million, and maybe that goes back toward my misunderstanding, because we don't really have the apples and the oranges to compare here. But it does seem funny that if we're collecting less money, that our revenues have gone up.
And that's just one revenue line item. Keep in mind, in particular for school districts, a big variable, I can't say this is the case, is federal funding. Federal funding is a roller coaster ride. Those of you that have been on the board a number of years, especially with new programs, E-rate, Medicaid, even your Title I funds or your grant funds, those could easily be a great variable. And I mean, only other thing that maybe attendance. I'm not exactly sure the other ones. I probably should be cautious here, but there's reasons for variables, and we can certainly look into that as well.
Yeah, chart would be
Okay, my turn. I've been quiet. So I really have 2 questions. First of all, did you receive the paper? Did they receive the questions that I had asked from staff in regards to? I wanted staff to answer, and also our external auditors. Did you receive those questions?
Yeah.
Okay. Are they completed?
Are they completed?
Yeah.
Yes.
Okay.
We'd be more than happy to answer any of them.
Okay. Well, there's just a couple of them that I wanted really to go. I don't want to go through each one because it'll take a little while.
Sure.
Did you complete it? And then,
Yes.
if you complete it, if we can just make copies and give them to our CFO and have them distributed tonight to our board members, I would appreciate it.
Okay.
The other question that I had, and again, there's been a lot of discussion, a lot of controversy in regards to the 301 funds. How many other school districts do you know of that used their 301s 301 funds to supplement deficiencies within their system? Or do you know if any? It's been brought to our attention that 301 funds have been used to supplement some deficiencies within our district.
Well, I guess that's where I'm cautious to say they were used to supplement deficiencies. It's interfund borrowing. It's a common practice and an unfortunate practice for governmental reporting.
But
The
301
interfund
funds are
borrowing is
for
not an indication
teachers.
of deficiencies.
Okay, here's my issue with that. And I understand interfund borrowing and journal entries and all that. My problem is the fact that we've used funds that was for a specific reason, which was to go to teachers for their work that they've done. And we've actually used it, I believe I've used it, and I believe you've even said it on your last CAFR, that we used it for supplementing some deficiencies in our other fundings. Am I correct or incorrect?
Mr. Hicks, can you, what deficiencies? Once
Well,
again,
anything.
Interfund borrowing is not a deficiency. I could not make that statement that
Okay.
interfund borrowing is a deficiency. We test that fund, and we're given specific procedures to test that fund to ensure compliance with state requirements. There's been no identified deficiencies in the use of those funds. Now,
Okay.
if you want to discuss the fund balance reserve, that's another discussion. But once again, we don't make the decision on how and when reserves are used.
Okay, can you tell me how many other school districts have used 301 funds for other measures other than paying teachers?
President Hicks, I just want to make a point here. Your 301 monies were used to meet cash flow needs. That's it.
Okay.
Okay, that was.
Well, that's a
they were being
deficiency
diverted.
there. Right. And my question is,
The district really doesn't have any control over the cash flows. You have expenditures that have to go out every week for
Right.
your payroll and whatnot. You may not have the cash available in the bank on my books to be able to meet those needs. It's much easier to meet those cash flow needs within your money that you already have on deposit with me than for me to have to go out and borrow money for you where you're now having to pay debt costs.
Right.
So it's much more efficient to do it this way to meet your cash flow needs.
but the problem with that is the teachers don't get paid the money that they should be getting paid. We have, how much money is in our 301 fund?
You're mixing apples and oranges, I think, as far as looking at the interfund borrowing.
Okay.
Because it's not misusing those funds. You're taking advantage of having that money sitting basically in a savings account to be able to pay your teachers. If you weren't doing that and I had to turn around and borrow money, or even worse yet, to actually register warrants because you couldn't borrow for whatever reason, which I have had that happen to some of our depositors before, I would be returning your teachers' paychecks unpaid.
Okay, so it's my understanding that we're going to have all the 301 funds distributed at the end of the year, I believe. Okay? So what's that going to do to us if we're using the 301 funds for our cash flow? That's telling me we're going to be short some money. Is that not correct?
You may. And at the end of the year, if you do not have enough money in your operating account, then I would end up having to provide resources for you and borrow money on your behalf.
Okay.
But I have been seeing over the last several years, your cash on deposit with me actually increasing. So
Well,
I
yeah,
think
because we haven't been giving out as much 301 funds.
more so than the balance in your 301 money.
Okay, that's what I need to know. Okay, thank you.
Mr. Hicks, can I
Ms.
just
Grijalva?
clarify? So
Sure.
I just want to highlight the fact that there are 49 million, we're like $49 million in arrears in payments. And so it makes it difficult when we're waiting on a payment to come in, we have to pay everything else. And so I think all they're doing, what the explanation has been, that I understand it, is that we have a pot of money that the different funds are not separated out in her office. And so let's say we have $100 million sitting there and we have an expense of $50 million that's coming out of this one specific fund on our books. For her, you have 100, so you're going to pay it. For us, that's where we have to go back and make sure that we're covering everything. But in her office, it's all covered. So there's no it's not that we were using 301 or any other fund because we didn't have money in our account. It's because we didn't have money in a certain fund, probably because we're 4 months behind or 5 months behind at any given time in payments. So $49 million, I mean, we have to make sure all of our teachers are covered, and if they didn't do interfund borrowing, then our teachers' checks would be bouncing.
Okay.
So it's not a, I mean, I guess you can say if you're talking about deficiencies or a deficit in one fund over the other, it's likely because we are owed 4 months of revenue from the state that we're waiting on.
Okay, so.
But our bills still keep coming.
But based off of that, if we get rid of all of the 301 funding, then we're going to be in a worse shape because we don't have that extra cash to go through that. So we're going to end up borrowing
Could
because
be,
we continue.
and that happens for some districts, depending on where their cash flows end up at that point in time on June 30th, the end of the year. Even during the year, there's times when I end up having to loan you cash so that we can clear your warrants because the cash flow hasn't come in. You have a significant part of your cash that comes in is out of taxes. Well, that only comes in during very narrow periods of time during the year. So you'll see your cash balances jump up and then they'll gradually taper down. And about the time the next tax collection cycle comes rolling around, oftentimes I'm having to loan you some money.
But I remember a conversation where we were $15 million in the black. So,
You mean in the red?
Black or the red?
or in the red. No, which one's good?
Black.
Black is better
Black
than
is
red.
good. No, we were told that we were $15 million. When Dr. Stegman and I were coming out, when we had the old CFO indicating that we're at $15 million deficit, then we were told by the superintendent, no, and then he brought forward information that we're 15 or $20 million in the black. So how do we go from that down to zero and borrowing? I'm trying to get a handle on this.
Let's not forget, you are not a cash basis entity. You have receivables out there. Those are considered when you're evaluating if you're in the black or not. As noted, you had $60 million in receivables due to you. That's considered when you're looking at whether or not you are not a cash basis entity. So I guess you will not have a cash flows problem if you can convince the state and the federal government to pay you timely.
Well, and we don't pay our bills every day either.
I don't think you're $60 million in arrear.
But no, but I'm pretty close to the same. I'm not a school district of this size either. I'm not the federal government either. So please don't patronize me by saying you're not $60 million. What I'm getting at,
sir, I'm at the school district. I wasn't. I meant.
Well, when I was communicating my home life,
$60 million in arrears.
But you were talking about your house.
Okay.
It was not anyway. It was talking about TUSD's not $60 million in arrear and making their payments.
Okay. So can you just tell me how many school districts in the state of Arizona that you do auditing for uses 301 funding for cash flow or anything else but to give to teachers? Do you have that information? If not, that's okay.
We can get back to you on that with the other questions.
I think Ms. Sedgwick and then Ms. Foster.
Forgive me if I am repeating you wrongly, Mr. Hicks, but the question that I'm hearing is that if TUSD, we collect taxes during very narrow periods of time, is that right?
Right.
And so are those on set days every year?
It's over a period of time. For instance, we mail the tax statements every September, and that's when people get the first notice of the taxes due. So they come in, we collect about 45% of the taxes due for the entire year between when the tax statements go out and November 1st.
And that's generally the same every year? That timeline kind of doesn't change?
Yes.
Okay, so then I think the question might be, or the question that I'm coming up with is, so if that is something that happens every year all the time, and the state has been in arrears paying out the different funds for many, many years also, this is not really a question for you, but it seems like there could be a way that TUSD could organize and manage, could strategize our budget and our schedules to deal with that reality, so that we're not, we're not jumping backwards through hoops?
That's really a question for your management, but having been involved in government for as long as I have been, your majority of your expenses, 90% of them or better, are going to be salaries, and you don't have any control over that. That's money that has to go out on a regular basis. So you really don't have a lot of flexibility to be able to manage cash flows.
Sure, but if we had, say, gosh, I can't remember the numbers, but if we have a giant bucket of money that we have to spend and we get that money at the end of the year, right? And there's some, hey, quick, put out that fire. If we have a strategy in place that we might be able to take that money and put it into a place where there might not be so much putting out fires. But again, these are not questions for you. These are really for our management, but food for thought. Maybe we can deal with these issues proactively in the future.
Can I ask?
Okay, Ms. Foster.
Yeah, Dr. Sanchez would like to
Oh,
respond.
Dr. Sanchez.
I know Mr. Hernandez can address this. What's the maximum amount that the state allows us to roll from year to year and keep as cash on hand before we're outside of state statute?
There is no cap on the budget balance carry forward. There's no cap. There is no cap on cash.
Okay.
At all.
So when you take a look at districts in Pima County, are we outside of the norm in terms of how we function, how we process funds, and the payment of salaries on a regular basis, and or any ability to pull funds? Are we functioning outside of the norm in the way that we manage the funds in TUSD compared to other districts in Pima County?
No, I mean, so the largest district that processes out of the Pima County School Superintendent is Amphitheater. They're the third largest district in Pima County. They have a cash deficit generally throughout the fiscal year. Pima County JTID is another one. The Vale School District is another one that we generally see a cash deficit. And so we generally, our office has to issue warrants on the order of their boards so that the treasurer can then pay those warrants, be they payroll or accounts payable. Mm-hmm. And so I wouldn't authorize a check, a warrant, as the agent of the county school superintendent if, one, a school district didn't have budget capacity in their maintenance and operations, for example, or if this were like an extracurricular tax credit fund and you're paying a coach, we wouldn't issue it because there's no cash. And that's set in statute. And so our responsibility in statute 15304 says that requires me as the agent of the county school superintendent to perform that action. Tucson Unified and Sunnyside, as the two pilot districts in Pima County, do that on their own. And so they're performing that within the limits of the statute that otherwise the county school superintendent would be performing for you if you were in our office.
Okay, thank you. Ms. Foster.
So there's three people up on this board that really, really want to show this community that the district misused 301 funds. And there's three people up here who are saying we need to hear that we did not. And I heard different answers. I think some people I think everybody felt they heard a little bit of what they wanted to hear. Because I heard Dr. Sanchez ask earlier, and you said no. And then Mr. Hicks just asked again, and I thought it was the same question, and I felt like he heard what he wanted to hear. And so could you please help us clarify, because I don't want anybody to leave here with your financial expertise in this. We need a straight answer.
If we identified non-compliance with the USFR compliance questionnaire that addresses 301, we'd be required to report that to you. Or if we identified any other non-compliance, that'd be material, we'd be required to report it to you. We performed tests on 301. We did not identify any misuse of funds for 301.
Thank you.
Thank you. Dr. Stegman.
I want to ask a quick question based on something you said that threw me off. So you said that we do not operate on cash basis. I thought by statute, government entities in the state generally operate on cash, not accrual. Do I misunderstand that?
The financial statements presented to you tonight are not cash basis. They are modified accrual and accrual basis as required by the government reporting standards. That's more specifically what I was referring to were your financial statements. And when we kind of talk about, that's been kind of the discussion tonight, is looking at the numbers presented in the financial statements.
But our ability, and you can correct me, you're the accountant and I'm not, but I thought our ability to use accrual accounting was tightly limited by statute. It's very different from the corporate environment. Am I incorrect about that?
Your records.
Right, because things are, I mean, the fiscal year pretty much terminates in almost all respects the accounting of the district. It's a year, then it's a year, then it's a year. And I thought that was dictated by statute. But as I said, you're the accountant, I'm not. So
No, the financial statements that were presented to you tonight, your comprehensive annual financial report, they require to be presented on the two bases, accrual basis and modified accrual, in order to receive an opinion on your financial statements. All right.
Okay.
Just
Ms.
one more.
Grijalva.
So, really quickly, does interfund borrowing happen in other districts? All in every district? Okay, great. Thank you.
In my household. Just to let you know, the state also has the same problem in collecting their monies to go out also. Sure. So it's not that the state has all this cash all the time. They have to get the money, so they have to wait for taxes and that to come out too. So at that, I want to thank you guys for your persistence and your dedication to sit here through all this, and I do appreciate everything. And then our county treasurer.
Thank you.
Thank you very much. We're going to take a short recess for 5 minutes.